Here's something that should worry you a bit. Most people have no clue what's actually happening to their pension. It's not because they're lazy or careless. It's that nobody actually sits them down and explains it. And by the time most people find out, there's not much time left to fix it. Think about it this way. If someone was pulling money out of your pension every single month, just a little at a time, would you actually notice? Be honest. Most people wouldn't. And that's basically what's going on right now, quietly, in the background, while everyone gets on with their lives. There are 5 of these quiet problems built into how UK pensions work. None of them make headlines, but add them up and they can cost you tens of thousands of pounds by the time you retire. Let's go through them. First up, you're probably being charged more than you realize. Pensions come with fees. Management fees, platform fees, fund fees, sometimes all 3 at once. On average, a UK pension charges about 0.75% a year. Doesn't sound like a lot, right? But on a £100,000 pot, that's £750 disappearing every single year. Stretch that over 30 years with compound erosion, and you're looking at more than £65,000 gone in charges alone. And here's the kicker. That 0.75% cap only applies to auto-enrolled workplace pensions. Got an older pension from the 90s or early 2000s? It could be charging 1.5%, even 2%. If you've got one sitting somewhere gathering dust, go check the charges tonight. Seriously. Second problem, your money might be sitting in the wrong fund entirely. When you got auto-enrolled, you were dropped into a default fund, built for the average person, not specifically you. And these default funds tend to play it way too safe. Say you're 30 and your money's growing at 3% a year instead of 6%. That gap alone could cost you roughly £150,000 over a 35-year career. You got put into that fund during the one moment you probably weren't paying attention at all. Most people never go back and change it. Most people really should. Third one, you're probably not claiming all the tax relief you're entitled to. This is genuinely free money people leave sitting on the table. For every £80 you put in, the government tops it up to £100. That's a 25% return before your money's even done anything. Higher rate taxpayer, you're entitled to 40% relief, but your provider only claims 20% automatically. You have to go claim the rest yourself through self-assessment. Millions of people just don't. It's your money. The government isn't going to chase you down to remind you. Number 4, you've probably lost track of old pensions without even realizing it. The average person in the UK changes jobs 11 times, and pretty much every job change leaves a pension pot behind somewhere. Most people genuinely have no idea how many pots they've got scattered around. Right now, there's an estimated 2.8 million lost pension pots across the UK, worth about £26 billion combined. Just sitting there, unclaimed. Some of it might be yours. Changed jobs in the last decade? The government runs a free pension tracing service at gov.uk. Takes about 10 minutes. And the 5th one, probably the biggest. You're counting on the state pension to cover the rest, and it probably won't. Right now, it pays £221 and 20 pence a week, which works out to £11,500 a year. To get the full amount you need 35 qualifying years of national insurance contributions. Career breaks, time abroad, periods of self-employment, all of that can knock that number down. Here's the part nobody wants to hear. £11,500 a year isn't retirement. It's barely survival. The Joseph Rowntree Foundation puts the minimum income standard for a single person at around £14,400 a year. So the state pension doesn't even cover that baseline. If your whole plan is workplace pension plus state pension, you need to actually sit down and model those numbers, not just assume it'll work out. None of this is dramatic stuff. It happens slowly, quietly, in the background, until suddenly you're 10 years out from retirement, and the math just isn't there. The good news is the fixes aren't complicated. Check what you're being charged. Look at what fund your money's actually in. Go claim the tax relief you're owed. Track down your old pots. And stop treating the state pension like it's a full plan on its own, because it isn't.